It's about that time of day again, folks. Welcome back. Welcome back. Happy Quadruple Witching Monday. That's right, Monday morning of Quadruple Witching Week. That's the third week of every 3 months. Well, third Friday of every 3 months is Quad Witching. This would be the week of Quad Witching. Happy Monday to you guys. My name is Joseph James. I'm here from School of Trade. I'm here with Marty Errico from NYMEX. He's from Traders Audio. And this morning we have our very special morning prep. We're going from the screen here in Los Angeles all the way to the trading floor in New York City in the NYMEX Exchange. Once again, my name is JJ. I'm a lonely old technical analyst here from Los Angeles. I'm going to be starting this morning here with a top-down approach, analyzing dailies, weekly charts. It's the beginning of the week. We'll take a look at a whole week's worth of information, and we're going to set forth here on a week of trading in front of us. I'm going to zoom all the way in on an overnight session chart. I'm going to look at London, look at the overnight trading session. And my job this morning is pretty simple. It's to anticipate direction at the open and to find those high percentage trading opportunities this morning starting at 8 o'clock in the morning. Now, once I'm done with you, I'm going to toss you over here to Marty Errico. We're going all the way from Los Angeles over to New York City. Marty is the first one on the floor this morning. We were just talking to him about how everybody comes in a little bit later than when he's in. He's the first person on the floor this morning. He's the first person seeing what's happening in the pit this morning. And Marty's going to be kind enough to give us his very unique pit analysis today, looking at direction, divergence, market internals. We'll look at some option prices. And, of course, the very important, those pit session trading levels that all of us who are trading on screens need to be paying attention to. All righty. You've heard enough from me. Let's jump right down to some charts here this morning. I'm going to start with a weekly chart here this morning on a Monday morning. You know me. I always like to begin here. Beginning of the week, end of the week, we like to look at those dailies and those weeklies. Now remember, kids, if you're following along at home, these weekly charts, these daily charts are not going to be used to take trades today. They're going to be used for market personality. They're going to be used to set the stage. What do we see here, folks? We see a price wedge. Look a little bit closer. What else do we see here? We see a sideways trading range, right? See this little sideways range we have going here on the weekly chart? Absolutely. What's the top of that sideways range look like? 99.44. And what's that funny looking number right to the right of it? I'll give you a hint. It's got 4 zeros. Kind of gives you a little bit of goosebumps every time you see it, right? It might make you want to go, might make you sick to your stomach, depending on what type of trader you are. Well, we got that big round number of 100. So here we go. As you can see, there was an old wedge there, right? Remember that wedge from last week? Remember how we talked about breaking above and staying above? Well, we broke above and we stayed above. Now, just like I said, middle to late last week, we got that 100 level. We get that 100 level screaming at us right now, directly overhead. So keep an eye on the 100. You can pretty much, I don't want to say guarantee, but I think there's going to be a very, very good likelihood we see 100 this week. It's a quad witching week. It's a summertime week. Boy, there are a lot of different fundamental reasons why price should rise, and there's a lot of reasons why the self-fulfilling prophecy, all of us traders out there know that summertime usually means higher prices. Summertime also usually means a fluttering up in price. Did you know that while the bears are away, right, the bulls will play? Have you ever heard of that? Have you ever heard that prices tend to rise in the summertime? You know why that is? It's because all the real traders are on their mega yachts, right? They're all traveling around the world experiencing their summertime. Meanwhile, the rookies out there who don't understand what's really going on, well, there's nobody standing in their way to keep buying. It's a very interesting phenomenon. We'll talk about that more and more throughout the week. As you can see on the weekly chart, 99.44. Moving to the top of the price wedge. This weekly chart, what does it tell me? It tells me the bulls are in charge here, and it tells me we're probably going to see higher prices as the week progresses. Now, this is just a weekly chart. I need something to give me a little bit more information. You know, I go down to a daily chart. The daily chart's not going to help me out too much. We move to a daily chart right now. I don't really get a lot more out of a daily chart. You'll notice here the same stuff. On this daily chart, we can see the same 99.44, that same big, big round number of 100. And we can see that price wedge that we just broke, right? So not a lot new here off the daily chart. But again, since we've broken and closed above that price wedge, we can expect the buyers as they bull their way into this sell zone. You'll notice there's a full sell zone right here. Lots of supply entering the market. You can see the buyers having no problems absorbing it. 99.44, that's our target here. And you'll also notice that we have a bull channel now that we've defined. And of course, this bull channel, take a look at it on a 4-hour chart in just a moment. This bull channel does suggest that if price does keep going above 99.44, we will be seeing the highs of those channels being tested next. Bullish, bullish, bullish across the board here. What about the 4-hour? Let's zoom in a little bit closer here now to a 4-hour. And on the 4-hour chart, now we're starting to see just how easy it's going to be to hit that 100 level. Now, I guess easy might be a relative term. Tell that to the buyers that are trying to make their way through the following sell zones. We've got 99.29, 98.61, and you can see here we are just about to get a 4-hour candle. We got about 18 minutes left here. See the bottom right-hand corner of your chart. Got about 18 minutes left. It looks like we are going to close above this key sell zone, which means those will be removed automatically from our indicators, and you'll see 98.61 will most likely stay there. So 98.61 will most likely be the final two sell zones overhead before we run right into that 123 channel reversal zone. Remember, guys, rewind the tape. If you go back a few weeks, over the last few weeks, we've seen a lot of price wedges, and price channels. And price channels are very easy to anticipate support and resistance. We see a serious resistance zone here now up at 123. So keep an eye on that. That's going to be our #1 target. And you can see here, there's the 100 level that's just begging those buyers, right, to keep pushing. We know that 100 level is a psychological level, and we know we have a technical level here at 123. That's enough to tell me that buying pullbacks on the way up this week is most likely going to be the highest percentage trades. Now, this, of course, is outlined in the week. The week does look bullish at this time. What I'm going to do now is, looking at this channel, the channel telling me to keep buying pullbacks on the way up this week, the sell zone's telling me that I can't buy at the highs. I've got to wait to see a pullback off these highs and then get in, right? That way I'm not buying into a brick wall. So I'm bullish this week. But let's change this up a little bit. Let's go down to a 60-minute chart now, and let's see what we're looking at today, because this is giving me a good idea of what my plan is going to look like this week. But I'd like to see what's happening today. What did I do with that 60-minute? There's a 5-minute. Let me see if we can find that 60-minute. There we go. 60-minute chart now. The 60-minute chart's telling me obviously the very same thing. Bull channel. We can see we've got trend lines coming up from the bottoms. This is it's just screaming at us, right? We got to be buying pullbacks. Clearly here now, I can remove this one, right? So here we are inside of the major bull channel. And what I've done is I've marked up 98.06 and 97.67. These are two easy spots here that I'm going to be looking to buy this morning. So I'm not going to buy at the highs. I never want to buy at the highs. I'm going to wait for a pullback. And you might be saying to yourself, but what if it doesn't go, what if it doesn't pull back? What if it doesn't pull back, Joe? What if this thing just keeps on going forever? And I'm going to say, well, then I guess we're not going to be taking a trade. The bulls out there are going to have to take a break every once in a while. And when they do it, we're going to wait for that pullback, and we're going to get into that trade on a pullback. The reason why we buy on pullbacks, there's a bunch of this on my blog already. The reason why we buy pullbacks, ladies and gents, is because it gives us the lowest risk and the highest reward. Remember, we have to put our stop losses, we got to live and die by our stops. We have to put our stop losses where we anticipate the trade becomes invalid. So as we pull back, I put my stop losses below these locations to buy. That gives me a very low risk, but a very high reward to the trade. If I buy at the highs, my stop loss still has to be in the same place, right? If I get in long at the highs here, my stop loss still needs to be in the same spot. Now I have all of this risk and very little reward. So I must buy a pullback. That means all I can do is stay patient. You can already see the wheels in motion here on this 60-minute chart. You got this big candlestick wick, this big inverted hammer pattern we see on the 60-minute chart. So we've already got the wheels in motion. We're going to look to buy this 98 even, buy the 96.67. If price happens to blow right through it, it may, I don't think it will, but it might. 97.10, 96.52, 95.64. Guys, these are easy levels to find on the 60-minute chart. And again, as always, I'll put this up on the blog today so you guys have levels for it. All right, buying pullbacks on the way up. Do not buy those highs. Do not trade with. That's what all the professionals want you guys to do. All right, let's go to the 5-minute now. 5-minute chart now. Ooh, baby, this is exactly what we need here. There's my buy zone right there, 98.03. What's the first thing we see this morning? First thing I notice is the London trading session, the overnight trading session. What does it look like overnight? What are we doing here? Okay, so we got a good range overnight, right? Get a decent range overnight. What do we look at first? We look at the disposition of the price action. What is it looking like in relation to the overnight session? There was a very wide range overnight, right? Look at how wide the range was. You can see how much wider it is than what we've seen last week. Now that tells me that we're likely for a pullback. That tells me we're likely for a short-term price reversal. Remember, if we have a wide range overnight, it tells me one of two things. Either the market is on a complete tear and I want to look to buy pullbacks, or the market has moved a significant amount, will then be tired and will need to consolidate before it then breaks out once again. So either way you slice it, this is either on a tear and I'm going to buy a pullback, or it's going to need to consolidate because it's been working so hard. Remember, guys, these markets cannot keep going forever, right? People need to continue. They need to continue to supply the demand. So bottom line is, this tells me we're due for a pretty decent pullback here. We're due for some consolidation. I would expect to see some consolidation around this previous high of day. Remember, this previous high of day is the high of day from last Friday, which means that this is a psychological level. If we get back below this level, the sellers will push it into that buy zone. This is exactly where we talked about earlier. Remember that 98.08? Absolutely, 98.03. This is where we're going to look to buy today. So I'm going to look to buy this 98.03. We will have some symmetry now that will take us up. And of course, from 98.03, I'll be going all the way up here now to that reversal number one, 99.23. All right, guys, we can most likely find some easy symmetry by drawing your line here, and we can look for some easy symmetry up to that 99.23. So look for the price for the buyers here. Look for the buyer target up at that 99.23, and that's where we're going to look for the best price reversal trade later on in the morning session. Let's go take a look at the numbers on the way down as we move lower this morning. Again, keep an eye on that previous high of day. I have a funny feeling that previous high of day is going to be a little bit of a sticking point here on a summertime Monday. Father's Day was here in the U.S. on Sunday, so most people are a little bit underslept this morning, you could probably say. A lot of folks traveling. I was traveling late last night as well, so I can imagine, because the highway was packed last night when I was traveling home at midnight, right? I can imagine other people were probably stuck in that traffic as well, and they're probably groggily getting into their desk this morning as well. So remember, guys, if it's a holiday in your world, it's a holiday in everybody else's world. So we will expect to see a little bit of a slowdown, a little bit of a pullback to that previous high of day. Shouldn't last too long, though. We should make it into that 98.03. I will be looking to buy this 98 even area. As always, the reversal zone below me, that's an excellent buy as well, 97.76, 97.51. We've got the low of day at 97.38. We've got the reversal level at 97.20, 96.85. Guys, these are all levels I'm going to be buying at as we go lower. And remember, folks, I'm not just going to put a buy limit there. I'm going to wait for price to start to move in my direction. And then once it starts to move in my direction, as I said before, I'm buying pullbacks. So the 60-minute chart, the 4-hour chart, everything told me to look to get long. Now I go down to my 5-minute chart, and the 5-minute chart tells me exactly where I'm going to get long. 98.03, 97.76, 97.38. These are easy levels below me. But now let's anticipate I am getting long here now. Now where are we going to find our targets? Here are my targets for today. Don't forget, you've got that big round number up there at 100 even, guys. Don't forget about the big round number. That's going to clearly be a psychological level. Everybody has that on our minds, and so we know we've got to mark it up. Targets now overhead are going to be 98.92, 99.23, and again, 99.23 is definitely where we anticipate price going for the easiest profit target and price reversal opportunity. I will look for a short off of each one of these levels. We've got 99.58. Don't forget about that big round number of 100. And of course, we got 114. Don't forget also up top here, we've got that 123. That's that channel resistance level. If this thing goes on a tear this week, that 123 is going to be on everyone's radar for our buying target. All right, we've got our levels overhead. Write them down, mark them down in your own charts. I'm going to put these charts up in the blog here shortly as well. And again, like we said earlier, Longer-term time frames telling us to buy this week. Short-term time frames telling us to buy pullbacks today. Fast time frame tells us we've got a very wide range overnight and to expect a retracement, to expect a pullback, to expect some consolidation before we make that run up here as we go into the opening bell. Speaking of opening bell, I've got Marty Errico here from Traders Audio. He's chomping at the bit over the NYMEX exchange, waiting to get you guys going on the pit analysis. Marty, what are you seeing over there, my man? Let me transfer over to you and let you share your screen this morning.
Well, good morning, JJ. Thank you. While you do that, I'll start talking. So we've seen big activity to the upside, even in the overnight session. I mean, look at your Brent crude. Brent's trading around 106.5 today at the moment, and that 106.5 is quite impressive to see, which I really wasn't thinking we'd be able to get up there, at least in the overnight session, but we actually were able to get up there and now trade above it at the moment. So big upside activity here in the overnight session. Of course, as always, we want to see these levels printed in the pit session to really prove that these are levels of magnitude, levels of big upside activity. So again, I want to see this pit session opening the bell this morning above these 98 evens, 98.25s, and we can continue to stay bullish, especially above the 98.25. 98.25 was a really big level of resistance that I can show you real quick on this chart. If you look with me, again, I have very similar charts from JJ's channel, wedge here, and at 98.25 was the high that we had up here from Friday, the high from February, and also a high from March. So we had to break through that, and we did last night, but you can see we get no solid close or candle above it on the 240, so just something interesting to keep an eye on. So far this morning, as I mentioned, that Brent has been trading above 106 up to the 106.5. We do see crude and all of our products trading higher. That's the RBOB crude heating oil. Again, RBOB and heating oil both trade in the same pit as crude, so we follow these markets in key, and the correlation is spot on this morning as we see all three or all four majors trading higher this morning with the crude, RBOB, heating oil, and Brent. We look at our spreads this morning on the right side. You see those Brent WTI spread very, very tight this morning, around $5 or so, 5.50 to be exact. And that spread has been coming in quite significantly on the roll. We've been seeing roll, obviously, the last couple of days in the pit. We could be front month. Well, we will be front month probably tomorrow to Wednesday in the pit. So on that roll, we've been watching that Brent August contract, WTI July contract, and the spread between is narrowed in quite substantially, which has been a very bullish indication. If you follow this with me every day, you will see this bullish type price action come into play when this spread tightens up. So when the spread tightens up, crude trades higher. When it starts to widen up and becomes a little bit wide, more in value, crude will trade lower. The calendar spreads also this morning are very in contango as well, by at least 10 cents on each spread for the calendar spreads. Volatility has been just getting clobbered. I mean, volatility insubstantially, which we will look at in just a minute on the other the other sheet that I have. So volatility has been coming in quite substantially the last couple of days, and that's been very bullish for the crude. Our currencies here as well. Risk-on sentiment in full, 100% risk-on sentiment. Probably, I would say 80% risk-on, risk-off sentiment, 20% supply-demand in the range for each day on crude. But this dollar has been trading significantly lower down into the 80 handle. Right now I have your dollar index SEP contract we're looking at here, trading at just about 80.88 even, so still in the 80 handle. Very bullish for crude as this dollar continues to fall. Euro and other majors trading higher, along with the Aussie and Canadian as well, trading a bit higher. The crack values as well have been just showing us a little bit of a bullish-like scenario here between all three products, crude, RBOB, heating oil. The crack values, the heating oil and RBOB values have been just skyrocketing as well, along with here our crude. So we use the crack values just a little different in the supply-demand differential for the spreads as we would look at the Brent or the counter spreads. So again, different correlation there, which you guys should all know about. Let's continue on and let's talk now about what's happening here in just terms of volatility, as I mentioned. So the last couple of days we were watching these synthetic bids come into the market. And when I say synthetic bid, it's really just simply that 95.5 to 100 and 102 fence that I was talking about, the July 94 $5.50 fence that came into the market. That's a synthetic bid, but that's now long gone out of the market. So the synthetic bids are lifted, they're out, and now these true value bids are coming into the market, and they're coming in hard. We've been watching size associated with the trade around that, in the pit at least here, with that July 100, July 102, Augie 100, Augie 102 call. We saw some big call spreads, 97 to 100, 95 to 100, 95 to 97 call spreads come into play. Very dirt cheap. You guys can buy them for $400 and still get into that trade, and they're very cheap. So a lot of the larger traders in the pit bring size to that trade, and they bring it into the pit. A couple of pieces that hit the pit on Friday were still that regular sentiment with the locals here. The locals have been still continuing to kind of sell volatility. They've been selling they've been selling puts and buying calls, bullish play. They've been buying the outright contract as well, and I believe they're going to keep on buying dips, and they're going to keep on buying this thing on up. So we were talking about last night, if we need to close and settle above $97 even for a couple days. If we can hold this $97 level and establish some support down below, and we can hold 97 for the next 3 days, 4 days, that will be bullish, and that will get us up to $100. If we start to break and we start to sell down the high of these channels and wedges that I'm going to show you in a second, that will be quite bearish, and then we can kind of fall back into that range and not make it up to 100. So the key is to close and settle the pit session above the $97 level for the next couple of days, and we can get some strength. You can see early morning now we're trading up at 98.25 right now. That 98.25 was the high, as I mentioned on that daily chart that I showed you. That was the high that we saw back in February, March, and now obviously yesterday, Friday's pit session. Now we trade above it in the overnight, so if we can open above it in the pit session at 9 o'clock, that print is above 25, we'll be bullish today. So that's all we're looking for this morning. Let's also keep in mind that one of the highest percentage trades are to sell the resistance above an advanced price structure, so that would be, something you want to keep in the back of your mind. But again, I give the benefit of doubt to the bulls that we have been given the last couple of days. All right, so vol is in 19%. Open interest this morning, 110,656 on the July contract. On the Augie contract right now, we see open interest currently stands at 239,456. So open interest is slightly coming off just a bit and skewing off on even outer months, kind of giving us that bullish sentiment. So as the shorts get squeezed out, open interest just becomes a little lighter and less, and we're also rolling as well. As I mentioned, those large trades in the pit, 98 calls, 100 calls, they've been targeting, and they also put in a little bit of money into the 95 even put. Alrighty, guys, let's talk about Friday's pit session. Your high, 98.25. Once again, 98.25, your high. On Friday's pit session, your low, 97.39. Once again, that's your low, 97.39. Daily pivot today, 97.82, which we were trading well above at the moment. I got some resistance above at 98.25, 98.68, and 99.39, which JJ was mentioning, that 99.40 level. 99.40 is a very important level. It was a high that was established back in January and February of this year, and that was a few times tested that high. So we're going to see if we can go and test that. Support down below, I got 97.39, which was our low of the day from Friday. It's funny, that's our first level of support. Then we have 96.96, and 96.10 is some support down below. So we're going to continue to watch that implied volatility today. We're going to continue to watch the OVX, the front vol index, and our vol index in general. Alrighty, guys, let's move on over to natural gas now. Natural gas, very exciting here. I'm going to pull back those levels in just a second. I just want to show you that we're kind of towards the middle. Don't fiddle in the middle of that wedge. That's natural gas. These are pit session charts. You can see the pit session chart. I'm going to show this to a couple traders today when we sit down for coffee this morning and show them the bullish channel here. We're up towards the high end of it. Can we pull back and break out of it? Certainly, yes. So those are the pit trading charts on top. That's why price isn't moving on them. They start at 9. They close at 230. All right, so natural gas. Let's move on to natty gas. You can see a little bit of a bullish type sentiment in the overnight session. Let me tell you one thing. On the close at 230, we're really 227 to 230. Huge fun buying. huge fund buying. The big macro funds and hedge funds that use the pit to place orders, they were buying the hell out of natural gas at the close on Friday. So look at the overnight session in natural gas. We kind of look at this overnight session in natural gas. We did trade higher, obviously, up towards our resistance of 380. I spoke about it last night. We'll make it up to 380. I was thinking sometime today during the pit session, but there are some very strong buyers that happen to come into natural gas at 2:30 on Friday. If you look at the COT report, the managed money and paper are net long also. So they come in and they just do some huge buying around that 375 on Friday. And 375 is the very fair number that we were watching. They buy it outright in the pit, on the pit traded contract, on the contract that you guys trade. They bought it also in the options as well. So big time buying. We're up at a little bit of resistance now. Trade the range, but be bullish. That's all I can tell you guys. Trade the range in natural gas, but have a little bit of a bullish sentiment to it because it seems like we can make it back up to at least 390. So that's going to be on the weekly outlook. Today, game plan of attack in natural gas, I would be trading within the range. Obviously, the high end of this range is going to be 385. Right now, the high of the range is going to be 383. So sell the highs, buy the lows, and have a little bit of a bullish sentiment to it. Keep in mind, we're not going to fight these hedge funds and these big macro funds that are coming in and buying the stuff. And also, you want to keep in mind the Baker Hughes rig counts were bullish, and the inventory from last week is bullish. And we are going to look at weather this morning as well. Weather is now going to be impacting this market big time. So I'm going to look at the 6 to 10 day and the 18 to 14 day forecast while I'm getting prepared for the broadcast today. So when we do the weather with West, we're going to be looking at that that variable in the market to move that market again. That's going to be a very big variable now that we're in the summer season. The demand that's created from weather, warmer than expected temperatures will skyrocket this market. If we stay average to below, it's going to start just not even being significant. All right, pit session high from Friday on your July natural gas contract. 379.70 your high, your low 372.90. Today your daily pivot is 375.5. Man, what a level to watch. Again, as soon as we get down to that level, just buy it. Resistance is above. I got 378.10, 382.30, and 389.10. Again, keep in mind you want to watch that 385.5 as well. We should add that in. All right, guys, support down below 371.30, 368.70, and 361.90. Yesterday's settle, on Friday's settle, I should say, 373.80. Open interest 126,815, and your implied volatility is pretty high today. It's a high volatile market the last couple of days, 34%, 33.5 in the vol index. Large trades in the pit for options and outrights, as I mentioned, were all upside activity. They target the 375 call. They target the 390 and $4 call. So 390, I think, is going to be the very important level that we want to keep an eye on in the next couple of days. So 375, 390, and $4 calls were purchased over 2,000 times in the pit. And then we also see this level here, guys, levels traded in, large strike levels to the downside on the put side. 380 to 385 puts were being bought as well. So 385, that's why I call it an important level along with that 390, because that's really where we can start to trade a little bit lower, and that's where we can reverse. Alrighty, guys, well, that's about it for me here. I'm going to throw it back over to JJ over in Los Angeles, as now we're starting to, we'll probably start to see some traders walk onto the trading floor very shortly here, as we're going to have 8:20 markets open up in just about 15 minutes. So I got an opening bell for precious metal futures products coming our way in just about 15 minutes, and I'll see you all here in just 45 minutes.
Boy, Marty, you get some pickup in your step this morning, my man. Excellent job. Excellent job. Great to have you here with us today, Marty. And it was great to see your charts today. I'll tell you, you really got your element going over there with the combination between the charts and the board of the pit, man. That was awesome. Guys, I don't know if you appreciated that, but that's a really unique view. What we just got from Marty Errico from the NYMEX exchange is we just heard fundamental and technical clues both lining up. My chart's saying bullish. Marty has completely different uses of opinion and different resources that he's using, and he's seeing the exact same thing. Boy, that was great. Hats off to you, Marty. Thank you for a great broadcast this morning. Guys, thank you all for coming in and tuning in this morning. Happy Monday to you. Now, don't forget, I got to warn you, this is OPEX week. This is quad witching week. Okay, this ain't your average Monday. This is not going to be your average week. So be prepared to see price action weighted heavily this early in the week. Don't forget, the third month of every 3 months, the third Friday every 3 months, that's this Friday. We got quad witching Friday. That means everything. All four asset classes are expiring the end of this week. What that means is those smart traders out there are going to be getting out of the marketplace early this week. So get your money made early this week, but be aware, later on in the week here, it's going to start really slowing down. I want to thank Marty from Traders Audio, Marty at tradersaudio.com. I'm JJ at School of Trade. Don't forget, guys, you can come in and join me every morning at 8 o'clock. I'm actually on vacation this week. Yeah, I know, right? I'm on vacation this week, so I'm actually not going to be trading in the trading this week. But make sure you join Marty and his partner Jeffrey on the NYMEX Exchange every morning at 8:50 a.m. Eastern Time. You can go right to tradersaudio.com and sign up there. You guys will find a lot of value there as well. As always, we'll see you all in 23 hours and 30 minutes, 7:30 a.m. Monday through Friday. We do our morning prep. I want to thank Marty for being here. I want to thank you guys for being here, and we'll catch you guys tomorrow morning. Have a great one. Don't forget to learn this so you can earn this, and we'll see you guys in the morning. Adios, amigos. Bye-bye for now.